So 2020, here we are.
Here we are. Going to be a very interesting year.
How come?
Well, it's an election year. So election years are always interesting. I think Trump is likely to be reelected. And in the interim, he's exhibited a lot of control over the economy. So our experts are telling us that we should expect stable to increased performance in the markets. And that should have a lot of opportunity in the construction industry. What do you think?
I tend to agree. It's interesting times. We've always, that term is used to death or overused, uncharted waters, still
Yes.
continues, and it's even more different now.
Interest rates are moving around a little bit. That's been helpful.
It is, and the stock market, it's just been crazy.
I know. It'll be interesting to see if there's a disconnect at some point.
Yes, it will be. Everybody was talking about geopolitical or some kind of an outside influence to cause a correction, and who knows if the coronavirus is it or not.
Right.
Seems like a little bump right now, but it was interesting. Last week, I attended the IMN Private Lenders Conference in Laguna, and extremely well attended. I mean, it was packed to the gills, and everybody's talking about, what's 2020 looking like? And one of the things that was discussed a lot is there is just a ton of capital out there. There's a ton of money ready to be placed for deals.
Definitely, and I think that's creating some unusual competition between the private equities and the traditional lenders. So also being driven by that is the expectations of borrowers, whether they're working with the private lenders or whether they're working with the traditional lenders, and how that will affect the construction industry.
Do you think the borrower's expectations really changed, whether it's a private lender or an institutional bank?
I do. I think that borrowers paying 6%, 7% on construction loans have a higher expectation of being treated differently. That draws are no more. I think it's the expectation is that draws are processed faster. That a little bit more of a white glove treatment.
Yeah. On the private side, I'm not seeing a lot of 6 and 7% rates. It for a long time it was 9 and 2, and it's dropped down some, but the term sheets are definitely loosening up. We're seeing a lot more non-recourse financing out there and higher loan-to-cost and higher loan-to-value ratios.
We are being supplemented a lot by equity groups within the private lender markets.
That's right. Do you think interest rates are impacting this whole kind of resurgence?
Yes. I mean, they've moved around a little bit. They haven't moved around a lot. And again, back to the election year, I think we can expect things to just hold. I don't think we're going to see a lot of craziness. I think we may, if the election results are different than expected, I think we'll see a very big change towards the last quarter of this year.
Earlier this week, Chapman University did their forecast for Southern California, and a couple of the highlights they were talking about was a flat year in 2020, just as to what you're saying. They do not see a recession this year, and they have seen, they said the reduction in interest rates year over year was a full percentage, and they said that has been a real stimulus to some activity. They see a little downside on the single family starts, but not so much on the multifamily starts. So, all real estate's local.
Correct. Yes. One of the things I think we're going to see a little bit more activity in is the solutions or California's attempt to deal with the homelessness in the inner cities, and some of the politics that are following that, and some of the money that's being freed up for that in 2020. Some of the things I've been watching where there seems to be a lot of interest in solving this issue, but not a lot of well-received solutions. So back to we'd like to see some affordable multifamily houses going up, but yet nobody wants to look at those in their backyards. There was a ballot initiative this week that failed.
Was that SB 50?
I don't recall the number of it, but it was to allow multifamily homes being put in single-family neighborhoods as long as they were close to public transportation. Yeah. And I think they have 3 days to get that through before it completely fails.
Yeah.
But it's not popular amongst those who are living in those neighborhoods.
No, it is not.
So some of the solutions are going to have to become a little bit more creative. But it is front and center on the news every single day.
I did see that, and that is Senate Bill 50, and it has got a lot of attention right now.
Yes.
Toby, what do you think about how this dearth of capital, these lower interest rates, this high activity level? What does that mean to our lender clients? What effect is it having on their business?
We're seeing some of our lender clients completely overwhelmed with deals right now, and I think the result will be good. I think it's going to generate more competition, more interest, might loosen up a little of the credit restrictions, which we've seen can have pretty bad results sometimes. Mm-hmm. So I think, again, the more competition is generally good, unless it affects the underwriting, which it may.
Yeah. I was talking to a good client at the conference who was saying we got to kiss a lot more frogs now because of the competition, and they are not willing to reduce their underwriting standards. So they're working harder for fewer deals, and those deals are being chased by other competitors of theirs. So I understand. It's not a surprise that they've got their head down and working very hard.
Right. Well, and the lenders, the institutional lenders have credit restrictions that they have to comply with. So it may push more money into the private industry or the private equity groups who have fewer legal restrictions. So they can loosen up those credit restrictions if they choose to, or if their investors or their investor groups are willing to accept that. It also might pull some people into the market that are not experts. We saw that, a few decades ago and that didn't turn out well, where a lot of people who are not professionals in the industry loaned money for construction projects and failed. That's
right. And I've seen some interesting new and aggressive programs, no income, stated loans, those kind of things, and I did not see those ever coming back.
No, well, we'd hope that they wouldn't come back.
Right.
So, but yeah, I think, like I said, overall, I think competition is good. It's good for us. It's good for everyone in the industry. So, for the most part.
Yes. I was reading an article. There's already funds being created for the potential change in this expansion cycle. I mean, it's the longest in history. It's a cyclical business. We know it's going to correct at some point. Everybody thought the correction would have happened by now, but there are funds that are in place, as well as other stacks of capital to just pounce at any time if they see a real opportunity in a dip in the market.
What do you think do you think there's going to be an additional inflow of foreign money?
Good question, because globally, the U.S. is still the most attractive country in which to invest. I mean, we're the most stable. We've got the most, robust markets, and it's there are a lot of challenges outside the U.S. and I don't see a whole from what I read, and I'm no stock market guy, but I don't see a lot of change there. How about you?
Well, the biggest challenge we see with foreign money coming into our world is the accessibility of the actual borrower. We have a handful of loans with foreign sponsors, mm-hmm. and what that does is it creates a lot of responsibility and a lot of interfacing with a general contractor who ends up driving the project. So that's one thing that we've seen. We have seen foreign money. We've seen it does create an interesting dynamic when you're actually in the middle of construction.
You're relying on an owner's rep and a general contractor, and if there's an issue, the lenders really want to go back to the sponsor.
Right, and in many cases it's just a serious lack of communication amongst all parties. So I think that we are preparing for more of that. And I think that we're going to have to, just understand that going into these projects that it's going to become a little bit more challenging.
Yeah. Probably going to differ by country too.
Yes.
I was reading that China's economy took a little dip last quarter. They put the brakes on money coming out of the country last year and even a little bit prior to that. But, we're seeing an inflow from other countries as well. So,
yeah. Handful from Korea.
yes. But everybody's looking at 2020 very aggressively. I think it's going to be a harder working year for everybody.
Yeah.
And that's not a bad thing.
No, not at all.
There's no reason to take unnecessary risk. I think it's a time to really make sure that you are working with a solid sponsor that's got good track record. They're a good credit decision. And the project has enough meat on the bone for everybody to make a profit. That's one of the things that some of the lenders were expressing at the conference was, how long have you owned the asset? Because the longer they've owned it, they've got more equity in it, and it makes the deal a little more stable.
Yeah, definitely for underwriting.
Yeah. Any other thoughts on what kind of construction you're seeing in 2020 as far as residential versus commercial or light industrial? Or
I think we're probably seeing a little bit more multifamily. We're seeing a lot of interest in the residential for seniors.
mm-hmm.
The 55 and older communities
Yep.
are gaining traction. And I've read a few articles about maybe that industry or that segment of the industry becoming maybe a little overbuilt, but we have not seen that ourselves. We read about it, but I've not seen that.
Yeah.
We're still seeing some pretty solid deals coming through on those.
Yes. I think we're also continuing to see a strong market in renovation. The housing stock in the country, so much of it was built in post-World War II, and there is just such a dearth that needs to be renovated and updated. We're seeing quite a bit of that throughout the city of LA and Northern California, and concurrently there are some code requirements that are being placed upon the properties, like earthquake retrofit, for example. So while they're doing tenant buyouts and the renovation, they're doing the earthquake retrofits. Can't get that one out.
Well, and if you think about that, that big fire in Los Angeles yesterday,
mm-hmm.
right? And the building being constructed in the 50s was not required to have fire sprinklers.
Yep.
And you think, how is that possible, right? How is it possible that a building with that many people in it does not have fire sprinklers? And so that's clearly front and center right now. So I would assume that someone's going to take a look at that building and require that at this point. It's had 2 fires in the last 10 years. And how is that going to affect other buildings in the LA area?
Yeah. One of the city councilmen already came out this morning and is going to put forth some kind of a proposal to the council about requiring older buildings to be retrofitted with fire sprinklers.
And who's going to pay for it?
Right, exactly. But I do believe because we still see a lot of deal flow for renovation. I think that's going to continue, especially on the multifamily side, and that potentially could balance out some of the ground up construction.
Yes. And again, from a political standpoint, how does the renovation market affect the rent control? And because if they're looking to push down rent costs and they continue to do a significant amount of rental renovation, which is going to increase the cost, how are they going to reconcile that?
Yeah, it's got to pencil or else the project won't move forward.
Right.
Well, definitely interesting dynamics in 2020. Lots of capital, lots of competition, low interest rates, election year.
Should be fun.
Yeah. Well, fasten your seatbelts.
Yep.